Hello, very good morning to all. I'm Kelvin here again. Welcome back to today's Daily Dose of Market Insights. Very good morning. Today will be the Thursday, the 24th of July, 2025. So as usual, before we jump straight into today's very interesting reaction from the markets, let's have a quick look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so give me 1 second. Okay, great. So as usual, before we jump straight into the intraday technical outlook on the six major stock indices, the 4 US dollar pair, the 2 key commodities markets, which is gold XAU/USD, and as well as the West Texas crude oil. Let's have a quick recap what has taken shape yesterday in terms of news flow, economic data release, and as well as any important data release or news flow that occurred before the start of our daily dose that we kickstart at 11 a.m. Singapore time every day, and how these particular flows and events impact the respective intraday movement. So let's start with the overnight US stock market first. So overnight US stock market, yesterday we do have, after the close of the US session, we have two key mega cap technology stocks, two key mega cap stocks reporting. One is non-technology, which is Tesla, and the other one is much more related to the AI high-tech arena, which is Alphabet, Google. So before I touch on these two earnings numbers, let's have a quick look at how did the S&P 500 perform yesterday. So across the board, the S&P 500, the Nasdaq, the Dow Jones, and even the Russell 2000, all of them continues to shape bullish, impulsive upmove sequence since late last week, where they broke above our short-term pivotal resistance level, totally invalidating that initial anticipated minor corrective pullback towards the 20-day moving average. So it's only the Dow Jones Industrial Average retested the 20-day moving average and then thereafter surge up higher. All right. So far, right now, the S&P 500 and the Nasdaq 100 continues to breach a fresh all-time high. So the S&P yesterday gained by 0.78%, the Nasdaq gained by 0.43%, and the top two performer now seems to be now the prior laggard. So still recall that the Dow Jones Industrial Average hasn't even hit its fresh all-time high yet. Later I'll share with you on the short-term intraday technical outlook. What is the current fresh all-time high? So yesterday it went up to 1.14%. And the Russell 2000 went up by 1.53%. So what we could see over here is that prior to the earnings release of Tesla and Alphabet, Google, there has been a series of very strong bullish momentum that is still basking in the limelight of the major US stock indices. It's all pertaining to that ongoing trade deal optimism that is getting materialized ahead of the current extended 1st of August deadline by the US White House. So yesterday, after a series of roadblocks between EU trade officials and US trade officials, finally, both sides now see some progress towards the EU-US trade deal prior to next week, 1st of August deadline. And right now, there seems to be some form of agreement between these two countries. And the US side of the story agreed to actually reduce EU tariffs from 30% to 15%. So that is a very, very positive development that causes the stock market to rally yesterday, both from the European side of the thing, which is the German DAX, and as well as the major US stock indices. So if you look at the German DAX, last few days has been underperforming, but it still managed to hold above the 50-day moving average, which we have our bullish bias still intact. So yesterday, the German DAX rallied by 0.8%, and the Euro-wide Euro stocks of 600 rallied by 1%. All right, over here. And also another form of optimism in the US stock market is definitely more pertaining to the semiconductor industry over here. That has been the market leader in terms of performance gain year to date, centered on NVIDIA, which has been right now, you guys know that it's a more than a 4 trillion market cap, which is the most valuable company globally, where also surpassing Apple's throne as well. So NVIDIA yesterday has a very strong rally to fresh all-time high. It's up by 2.25%. So that actually have a positive positive feedback loop into the semiconductor industry within the technology sector. So what causes the semiconductor sector to be so bullish yesterday was out of White House over here. So yesterday, US President Trump signed a slew of artificial intelligence presidential orders, more pertaining centered around more resources that's being so-called allocated to the AI industry for best practices and best know-how and in terms of regulation as well. And based on that, market participants' view is very positive because going forward, very likely there could be more resources being dedicated to this sector as this particular China-US high-tech war continues to loom around the corner over here. So that also created a very short-term positive feedback loop into the semiconductor industry yesterday, boosting the S&P 500 and the Nasdaq 100 to fresh all-time high, given that NVIDIA is the biggest market cap stock now in Nasdaq 100 and the S&P. Right. So now, if you look at the earnings release of Tesla, so yesterday, prior to the earnings release of Tesla over here, Tesla is actually up marginally by 0.14%. But however, after the release of the earnings results of Tesla, which is actually came in after the US session close, so we know that for US stocks, there is actually a pre-market and post-market and the normal market over here. So post-market, the stock reacted very negatively to the release of Tesla earnings. So they are down by negative 4.4%. So what causes this post-market sell-off in the Tesla stocks? It's actually due to Elon Musk's rather lackluster guardian. So Elon Musk is still the CEO of Tesla over here. So Elon Musk actually warned of a rough patch after Tesla Q2, very challenging Q2 so-called results at this point in time. And also the Q2 results earnings came in at 40 cents per share, missing a Wall Street estimate, and the revenue also fell by 12% to 2.25 billion, and that causes a negative feedback loop into the post-market share price of Tesla. And how about Google over here? So for Google, i.e. Alphabet. So Alphabet managed to actually beat earnings expectation. So initially at the normal US trading session is down by negative 0.31%, but overall after the release of the earnings, the stock price managed to spike up 1.72% over here. So what causes this spike out is because the earnings numbers are rather strong. So Alphabet boosted by AI and cloud demand as spending needs skyrocketed over here. So basically, Alphabet give a very rosy demand pertaining to AI intelligence services and products. So that actually boosted quarterly sales. And right now, going forward, they are required much more capital allocation towards this business area at this point in time. All right, so that actually saw a positive feedback loop in Alphabet share price after the release of its earnings result during the post-market session. But net overall, that continues to see the overall bullish momentum still intact on the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures as we are speaking right now. So still recall that the E-mini futures of both the Nasdaq and the S&P 500, they are traded almost on a 23-hour basis per day because of Globex and also our CFD product is kind of dependent on the price reaction from this Globex E-mini futures S&P 500 movement to actually give a price for our CFD product that is being linked to the S&P 500 and the Nasdaq 100. So the S&P 500 E-mini futures is up by 0.13% as we are speaking right now, and also the Nasdaq 100 is the top performer because of Alphabet, a positive share price movement, and given that Alphabet has a higher weightage in Nasdaq 100 compared to the S&P 500. So the Nasdaq 100 E-mini futures is now up by 0.39% at this point in time. All right. So, and also because of this positive feedback loop from the US stock market, and it starts to spread globally as well, and that is more pertaining to macro positive factor, which is the more and more countries that are previously facing a roadblock between the negotiation with US and its various trading partners on that higher threatened tariff, where Trump initially give up those tariff love letter. So those tariff love letter highlighted higher tariff has starts to lower down after some form of agreement that has been done. So market now is actually pricing in that in fact whatever Trump that has stated in the last 2 weeks or so on that potential threatened higher tariffs more or less will start to get lowered down as more and more countries is able to make we call it more headways in this ongoing trade negotiation with the US, way ahead of the newly extended 1st of August deadline. So that causes the Nikkei 225 to continue to shine. So say recall that in the Nikkei 225 previously, even before the release of this positive tariff news flow, there are signs of bullish elements from a momentum and technical perspective. We have highlighted late last week where we have keep on having a bullish buyer stance despite a kind of a minor sideways movement. And also the Hang Seng Index going to bust in the limelight, up by 0.65%, also within our expectation. The higher beta Hang Seng Tech is up by 0.74%. The HSCI, which comprises a benchmark of Chinese H shares listed on the Hong Kong Stock Exchange, a couple of major of them, up by 0.46%. And over to other parts of Asia, also we see very positive momentum. The Kospi 200, which is the South Korea benchmark stock index, is up by 0.16%. The TAIEX, which is the benchmark for the Taiwan stock market, is up by 0.10%. And our whopping STI continues to be in a red hot bullish fashion. So now it's up by 0.6%. So I believe that this should be the 14th consecutive day of fresh all-time high that is being on track. All right, over here. So and also the reason why the Asia stock market or the Asia Pacific benchmark stock indices is so rosy at this point in time is also because of the dollar continues to weaken, which I highlighted to you guys over here, is that whatever rebound that we see on the US dollar in the last week or so is more of a corrective rebound within a medium term and a major downtrend phase for the US dollar that is still intact over here. So now let me take a look at the FX market right now. So over here in the FX market, what you could see is that this is the 5-day rolling performance of the US dollar against the major currency. So as it continues its medium-term downtrend in the US dollar index, right now we see across the board of dollar weakness coming into the picture. So based on the 5-day rolling performance basis, the dollar now is the weakest against the Kiwi, against the Aussie. So the dollar is down by negative 1.8% and down by negative 1.9% against the Aussie and the Kiwi. So primarily also driven to the risk on behavior that's being seen in global equities right now. So once we see a bout of risk on behavior coming into play, higher beta currency like the Aussie dollar will continue to shine within the FX market phase, and that has a positive feedback loop into the Kiwi dollar as well. And also the dollar yen right now is also reacting very positively, down by negative 1.6% as it continues to trace back down towards the medium term ascending sideways range configuration. Later I'll share with you guys. So the dollar yen also riding on the backdrop of a very strong Nikkei 225, given the fact that there could be much more foreign demand heading back into the Nikkei. After all, in the last few weeks, there's some fear regarding about political uncertainty. So right now, this political uncertainty has now taken a backseat and now being passed in a macro positive factor. And what we could see over here is that even the euro dollar is also strengthening against the USD. Right now it's down by negative 1.4%, okay, based on this Friday rolling performance basis. All right, so now let's have a quick look at the dollar index. All right, so I will use the dollar index as a gauge of a dollar strength or dollar weakness. All right, or give me a big picture overall view. So what I could see over here is that we now have started to see one, give me a minute, yes, 1, 2, 3, 4, 5. Okay, 5 consecutive day of decline in the dollar index after a retest at the 50-day moving average, acting as a resistance level. And what we could see is that previously that 2.7% rally from the low of 1st of July all the way up to 17th of July. So this is a corrective rebound, and this corrective rebound has already over here. So by the 2 consecutive day of bearish breakdown below the 20-day moving average. So on the longer term perspective, it pays better to have a bearish view on the US dollar rather than a bullish view. Yes, on the intraday basis, we may see a bit of bounce of the dollar, but the bigger picture right now is the dollar bearish impulsive down move has started to resume based on this negative technical element that I share with you on the US dollar index that I share with you guys. All right, over here. So right now is the continuation of this medium-term downtrend and a major downtrend phase that has kick-started since the start of this year. All right, so now with that, we also take a picture look at gold itself over here. So if you look at gold, which I highlighted at the start of this week, there could be signs of a potential bullish breakout after 2 weeks of very tight sideways range configuration. Yes, the bullish breakout came in within expectation, and gold yesterday do a minor pullback. So if you recall that yesterday we flipped to a bearish bias for gold, looking for a setback a support level to reach around 3,380, which has already been met over here. All right, so let me share with you guys the picture of gold. Okay, so this is gold over here. Okay, so there is actually a bearish reaction off from the resistance level at 3,435. So yesterday gold was down by negative 1.29%, and it closed at 3,387, which is very close to our pullback support that I highlighted yesterday. So yesterday I flipped to a bearish bias for this potential minor pullback, and this potential minor pullback support has already been met. So yesterday pullback in gold is more likely due to positioning with this slew of trade deal optimism that is being announced, especially from the US and EU. And do not forget over here is that yes, even though gold is a safe haven demand, trade deals optimism potentially could reduce safe haven demand, but also gold have another positive factor that is supporting it going forward is a continuation of the weakened US dollar. All right, over here. So later I'll touch on the intraday technical outlook for gold, what will be my trend bias for today, and as well as the key levels to watch out for. And one more thing to before we go through the second segment of today's daily dose, which is the intraday technical outlook, let's have a quick look at the calendar. What are the data, key data that has released before 11 a.m., which is the start of our live daily dose webinar. So today will be Thursday, yeah. So today is actually a slew of PMI data released across the globe, the flash PMI data release for July. So earlier this morning, we have the release of Australia manufacturing PMI. So both the manufacturing PMI in Australia and as well as the Australia services PMI, all of them actually came in very, very firm. So for the flash month of July, the manufacturing PMI for Australia came in at 51.6, above 50.6 in the previous month of June. And the services, which is much more important, given that Australia is so considered as a services economy, is up by 53.8 from 51.8 previously printed in June. So net overall, the overall this is considered as tier 1 economic data because it's soft data survey based. So based on this tier 1 economic data in Australia, it indicates to us that there are still some forms of firmness in the Australia economic growth, and that could reduce less dovishness by RBA. So RBA may not be in so hurry or be so aggressive to cut interest rate going forward, and that also support the Aussie dollar. All right now. And also back to Japan over here. So Japan is a bit mixed. So we see the manufacturing PMI contracted. So market is expecting to be at 50.2, a slightly higher number for 50.1, almost unchanged, but it actually disappoint to 48.8. All right, for the month of July. from 50.1 in June. So that is telling that the manufacturing sector has contracted. But however, the services sector in Japan actually grew over here. So expand at a faster pace to 53.5 from 51.7 that was printed in June. So that actually explained to us, based on this mixed reading between the services and the PMI survey from Japan, that continues to see bullish momentum that is picking up in the Nikkei 225 as we are speaking right now. All right, so now that covers or conclude the first segment of today's daily dose. So let us now move on to the second segment, which is the intraday technical outlook, starting with the FX market. So with that, let me expand my screen as usual. Oops, I think, give me a minute, I think it froze. Okay, 1 second. Okay, let me expand my screen. Okay, good. I think the screen should be expanded. Okay, now let me start with the FX market first. All right, so starting with the euro dollar. Okay, 1 second. All right, so the euro dollar continues to surge up as expected and hit our resistance level at this 1.1770 over here. So with that, the RSI continues to be very in a very bullish momentum condition, as it continues to see a series of higher low holding above the 50 level mark over here, and there's no clear signs of uh, a bearish divergence as we are speaking right now. So what I'm going to do over here is that, given that it's coming close to the overbought level again, there could be some form of a minor pullback over here during the start of the European session. So minor pullback, intermediate support zone to watch will be at 1.1770, this area here, at 1.1740. So I will use a Titan short-term pivotal support for today at 117.10, which confluence with the 20-day moving average, and as well as the minor bullish reversal that is being seen on yesterday's start of the US session, where we start to form a bullish hammer right at the retest of this 20-day moving average yesterday. Okay, during the start of the US session. So for sure, this is a very important sentimental level for the bulls to maintain its bullish momentum. So with a Titan short-term pivotal support at 117.10 and a risk of a minor consolidation or pullback at around 117.70, 117.40 during the start of the European session, because the hourly RSI is now coming to the overbought zone again, we will still maintain our bullish bias, because technical elements are not showing any signs of exhaustion. Next resistance level to watch in first step will be the 1st of July minor swing high area and a Fibo extension level at 118.25, followed by 118.45. Above it potentially sees 119.10 next. However, a price action, instead of consolidating and start to shape a impulsive up move, but it starts to plummet below with an hourly close below 117.10. Today's intraday bullish bias will be negated to see another round of minor corrective decline to expose the next near-term support level at 116.60, 116.20, which confluence with the medium-term ascending channel from the low of 13th of May 2025. So that's for the euro dollar. Up next will be the sterling dollar. So sterling dollar also rallied and hit, now testing our resistance at 135.80, surpassing the first resistance at 135.40, and also surpassing the 20-day moving average as well as during the US session yesterday. So what we could see right now over here is that the RSI now has really hit the overbought level and now attempting to has really exited from the overbought level. But prior hitting the overbought level, there's no bearish divergence as RSI continues to shape higher high. So given that it's now working off from a overbought zone that is being hit on the US session yesterday, so there is a risk that during the start of the European session, there could be some form of minor pullback or consolidation before the impulsive bullish up move resumes thereafter. So I'll be looking out for the first support level at 135.45 for that minor consolidation or pullback, maximum 135.10. So that will be my Titan short-term pivotal resistance, Titan short-term pivotal support level for today. That also confluence with very closely to the 50-day moving average. So using an adjusted Titan short-term pivotal support at 135.10, still maintain a bullish bias view for the sterling dollar after a potential minor consolidation or pullback at the 135.45 level. Above 135.80 exposes the next intermediate resistance level at 136.40, 136.85, which is this very clearly this graphical minor congestion area of 7th of July 8th of July, and as well as 30th of June, 4th of July. And if I do the FIBO extension of this ongoing minor impulsive wave 3 based on the Elliott wave perspective, all right, so that is 2 times FIBO. Okay, give me a minute. All right. So this is close to 2 times FIBO extension, and the next one is the wave 3 extension at 2.618 as well. That confluence with this graphical minor intermediate resistance level. Only a bearish breakdown and an hourly close below 135.10 that would invalidate today's intraday bullish bias on the sterling dollar to kickstart a minor corrective decline sequence, exposing 134.70 again. Below 134.70 may seek out the minor swing low area of 21st of July, and also a psychological level at 134 figure. Right, so that's for the sterling dollar, still maintaining our intraday bullish bias after a potential minor setback with adjusted tighten short-term pivotal support level for today at 135.10. Next up will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So Aussie dollar managed to finally break above the 66 psychological level, all right, that has been keeping it since 1st of July. So with this bullish breakout, very obviously right now we are in a start of a bullish impulsive upmove sequence after that rather choppy sideways range from 1st of July all the way up to 17th of July over here. So right now the RSI now is coming back to the overbought level again. So with the overbought level right now there, and it's coming to the next resistance level at 66.30, 66.45. There could be a minor pullback taking shape during the European session to retest the 66 figure level that has just got taken out as we are speaking right now at the early start of the Asia session. So I don't want to tighten the short-term pivotal support to be so tight at 66 figure level, just in case of any whipsaw. I will use the next minor graphical resistance level, which is the former minor swing high of 14th of July and 15th of July. And if you do the FIBO retracement of this last impulsive upmove sequence up, which is the wave 3, minor wave 3, that also comprises the 38.2% FIBO retracement level as well, confluencing with the graphical resistance level as graphical support level at 65.70. So using 65.70 as my Titan short-term pivotal support level for today, bear in mind there could be a risk of a minor pullback towards the 66 figure level again. After this minor pullback has ended, potentially the impulsive movement could resume on the Aussie dollar as long as 65.70 short-term pivotal support holds. Next resistance level to watch will be 66.45 followed by 66.70, which is the 2 times FIBO extension taken from the low of 17th of June, and from the 1 time FIBO extension confluencing from the low of 23rd of June. So it's a FIBO extension cluster level at the 66.70 resistance level. Only a bearish breakdown and hourly close below 65.70, then that bullish bias view for today will be negated on the Aussie dollar to kickstart another round of minor choppy corrective pullback sequence, revisiting the 20-day moving average, confluencing as the next intermediate support at 65.40/65.30. So if upon hitting 65.40/65.30, I'll be on the lookout for bullish reversal candlestick to flip my bullish biasness back again, right, on the Aussie dollar. So for now, these are the 2 key support level to watch. First support level 66 figure for a potential minor pullback. Maximum 65.70, which is my Titan short-term pivotal support level to maintain my bullish bias view for the Aussie dollar for today. All right, and now up next will be the dollar yen. All right, so still recall dollar yen at the start of this week we flipped back to a bearish bias because the bullish momentum has started to stall right at this rather medium-term ascending range configuration on the dollar yen since the low of 22nd of April. All right, and also the exhaustion also came close to the key 200-day moving average, which is overall this is our pivotal resistance zone at 149 figure slash 149.60. So now it's actually en route to actually retest the lower limit of this minor ascending channel, a minor ascending range support level. So 1, 2, 3, 4 consecutive day of decline on the Aussie on the dollar yen over here, and also the RSI hasn't hit the oversold level yet based on the daily time frame. So there could be much more downside potential to go from a higher time frame level. So given that the hourly dollar yen chart over here has started to broke down as intended, and right now it's also broken down below the 20-day moving average as well as we are speaking, hitting the next support level at 145.85. And so far the hourly RSI is not showing any signs of a bullish divergence, and in fact there's a bearish breakdown over here as we are speaking. Okay, there's a bearish breakdown. So indicating that the downside momentum still remains intact. So first resistance level to watch will be at this pullback line here, which is very close to the 20-day moving average. All right, at 14640. Pivotal resistance level will be the inverted V-shaped bearish reaction of this very previously former minor support level, now turns into a pullback resistance after that bearish reaction of the 14715 level. So this is indeed a key sentiment level, at least on the intraday basis, for the bears to actually resume its bearish momentum. So 14715 will be my Titan short-term pivotal resistance for today. First resistance will be a potential retest at the 20-day moving average, just broken down during the 8 a.m. or 9 a.m. hour mark Singapore time zone around 2 hours ago. That'll be 14640. So as long as any bounce didn't surpass 14715 Titan short-term pivotal resistance on the dollar yen, we will still maintain our intraday bearish bias. Next support level to watch after 14585 will be 14520, which is the 50-day moving average. Then thereafter will be followed by the medium-term support level at 14390. So this will be the ascending range support of that range configuration that is in place since 22nd of April 2025 low, which I share with you guys on the daily chart. However, if price action starts to break out and the hourly close above 14715, then today's bearish bias will be invalidated to see a squeeze up towards the top of the ascending range configuration again. 14790 above it sees a retest at the medium term pivotal resistance, which is the range top, which is 149 figure slash 14960, and so confluence with the upper limit confluence with the 200-day moving average. So that's for the dollar yen, still maintaining our intraday bearish bias view as it's float down towards the range support area using Titan short-term pivotal resistance now at 14715. All right, so that sum up the intraday outlook for today on these four major US dollar pair. So now let us turn our attention to the six major stock indices that we cover on a daily basis, starting from the Asia Pacific region with Hong Kong 33 representing the Hang Seng Index. So the Hang Seng Index going to pierce up expected, hit our first resistance, that hit the resistance level already at 25,650 slash 25,750. Taking a closer look at the hourly RSI. So the hourly RSI is not showing any signs of a clear bullish divergence, but in the overbought level. So there could be a sign of a minor pullback taking shape right now during the second half of the Asia Hong Kong stock trading session. So pullback level to watch, which is my Titan short-term pivotal resistance support level right now, pardon me, Titan short-term pivotal support level, which is my key short-term pivotal support, will be at 25,400 slash 25,260. So what's this level? Is in fact the pullback level of this minor ascending channel resistance from the low of 2nd of June that has taken out in today's Asia session, not today's, taken out in yesterday's late Asia session, did a retest during the US session and pierced up higher during today's Asia session as we are speaking. So this is what I call a bullish, minor bullish acceleration in the Hong Kong 33 representing the Hang Seng Index over here. So as long as this short-term Titan pivotal support zone holds on the Hong Kong 33, which is 25,400 slash 25,260, I will still maintain my intraday bullish bias from the Hong Kong 33. Above this level, seek out the next intermediate resistance zone at 26,030 slash 26,220, which is a Fibo extension cluster level from the low of 2nd of June, that's 1.618, and from the low of 9th of April, okay, that's another level. And graphically, if you were to look at the 26,200 level, this level here, if I go to the daily chart, okay, is this medium term swing high area of 21st of October and 27th of October. All right, over here. So and what we could see at this point in time, momentum is still strong even on the daily time frame chart as well. So now if you go to the hourly chart back again, so only a bearish breakdown below 25,400, 25,260. This is my Titan short-term pivotal support zone. Then today's intraday bullish bias were invalidated to kickstart a minor corrective decline sequence, exposing 24,850. A breakdown below it may see a deeper minor corrective pullback to retest the 20-day moving average, confluencing at the next graphical intermediate support level at 24,400 level, which is the minor swing low of 15th of July and 17th of July. All right, next up will be the Japan 225 representing the Nikkei 225. So the Nikkei 225 continues to pierce upward, not showing any sign of a minor pullback at all over here. RSI going to be in grossly oversold, overbought level, overbought region. So right now, what I could see is in the midst of an impulsive up move, which is a minor wave 3, wave 1, wave 2, wave 1, wave 2, wave 3, and this wave 3 is very steep over here. So right now it already cleared all our previous intermediate resistance that we highlighted, and is now breaking above 41,940, 41,975, which is the 2.618 Fibo extension. Above it sees the fresh all-time high, the current all-time high that was printed in last year July at 42,513. So right now, first support level to watch will be this minor consolidation area here that took shape in yesterday US session at 41,620. Slightly below it will be this another minor congestion area at 41,360 over here, 41,360. And if you will do the Fibo retracement of this rather steep impulsive minor wave 3 all the way from the low to the current intraday high, that also constitute with the 23 that kind of constitute with the 23.6% Fibo retracement as well. So using this Titan short-term pivotal support level at this 41,000, let me shift here, 41,360, we'll still maintain our intraday bullish bias for Japan 225. Next resistance level to watch will be at 42,513, followed by 43,100 level. All right, only a bearish breakdown with an hourly close below 41,360 that would invalidate today's intraday bullish bias to kickstart a much more deeper minor corrective pullback, exposing the next intermediate support area to watch will be at 40,850 / 41,050. Below it sees 40,445 next. So that's for the Japan 225. Still maintaining our intraday bullish bias for this very strong impulsive minor wave 3 sequence to play out, using a Titan short-term pivotal support level for today at 41,360. Next up will be the European indices. That is the Germany 30 representing the German DAX. So German DAX will pierce up very high, now breaking above our resistance level at 24,520 over here. Okay, so this level has been taken out. Right. So with that, I will tighten my short-term pivotal support level towards yesterday's minor swing high area that previously got rejected, similar to the previous rejection on this Monday as well. But however, it managed to stage a bounce yesterday before that strong impulsive up move take shape on an intraday basis. So this is a very clear sentiment level for the bulls to maintain in order to maintain their bullish impulsive up move sequence. So as long as any minor pullback managed to hold above 24,310 thereafter at the start of the European session, we will still maintain our bullish bias with the next resistance coming in, which is a fresh all-time high area at 24,760, followed by 24,960 / 25,040. All these are being defined by Fibo extension cluster level. However, a bearish breakdown below 24,310 will negate today's intraday bullish bias view to see a retest at the rising 20-day moving average, which confluencing with yesterday's US session at the start of the US session low at 23,140. Further break may expose 23,930 level, which is the right confluencing with the 50-day moving average as well, and as well this graphical minor swing low of 16th of July and 21st of July. So overall net elements there are bullish, still maintaining our intraday bullish bias on the Germany 30 as long as any minor pullback didn't surpass below the Titan short-term pivotal support for today at 24,310. Next up will be the major US stock indices, starting with the US Wall Street 30. So US Wall Street 30 finally broken above this minor descending trend line that is still in place since 7th of July. So overall, right now it's already almost hitting the fresh all-time high yesterday, but can't break above it at 45,100. Okay, so this this previous all-time high, not fresh all-time high, is almost hit the previous all-time high at 45,100. So yesterday's intraday high is 45,056. So this current all-time high 45,100 was printed previously in late December, ex-post US election, presidential election result. So right now the hourly RSI has really started to exit from the overbought level. So potentially there could be a minor pullback. So this minor pullback potentially could float between 44,850 and 44,620 / 44,400. So maximum is 44,400, which is the rising 20-day moving average. So I'll be using this Titan short-term pivotal support over here, 44,620, which is the pullback line of this minor descending, former pullback line of this former descending resistance, and 42,440, which is the rising 20-day moving average. So as long as this Titan short-term pivotal support zone holds above 45,100, seek out the next resistance level, which is a fresh all-time high at 45,455 / 45,520 on the US Wall Street 30, being defined by a Fibo extension cluster level. Only a bearish breakdown below 44,440, then that would invalidate today's intraday bullish bias view, and so invalidate yesterday's bullish breakout view from this minor descending trend line to seek out another potential corrective choppy decline sequence, exposing the next near-term support level at 44,150. A breakdown below it sees a deeper slide towards 43,800, 43,600. So then overall, still maintaining our intraday bullish bias, but notwithstanding there could be a form of a minor pullback taking shape first before another round of bullish impulsive upmove sequence arises for the US Wall Street 30 using Titan short-term pivotal support zone at 44,620, 44,440 to maintain my intraday bullish bias after this setback takes place on the US Wall Street 30. Next up will be the S&P 500 over here. So the S&P 500 also now hit fresh all-time high, and also the hourly RSI now starts to exit from the overbought level. So there could be some form of a minor setback taking shape as well. So as well as this minor setback didn't surpass our Titan short-term pivotal support zone for today, which is yesterday's minor swing low area at 66,340, 6340 / 6330 level. This will be my Titan short-term pivotal zone on Titan short-term pivotal support zone on the S&P 500, which is at 6,340, 6,330. So as long as this minor pullback didn't surpass below it, we will still maintain our intraday bullish bias view on the S&P 500. Next resistance level to watch will be 6,430 / 6,450 Fibo extension cluster level, and as well as the upper limit of this medium-term ascending channel that is still in place since the low of the 23rd of May over here. Okay, only a bearish breakdown below 6330 that would invalidate today's intraday bullish bias to kickstart a minor corrective pullback towards 6290 and even followed by 6255, which is the rising 20-day moving average. Lastly will be the Nasdaq 100. So Nasdaq 100 continues to pierce up as well, breaking above our resistance level and looking to retest a fresh all-time high level again. And also, but what's interesting is that the hourly RSI hasn't hit the overbought zone yet over here. So with that, there could be two support level to watch. First support level will be 23,190, which was taken out during the start of yesterday's last hour of the US session. Short-term pivotal support level will be yesterday US session low that has been tested on Wednesday and tested on Tuesday, which is at 23,020. So I'll use this Titan short-term pivotal or adjusted short-term pivotal support level at 23,020 to maintain my intraday bullish bias for the Nasdaq 100. Next resistance level to watch will be a zone at 23,400 / 23,480, which is a Fibo extension cluster level, and as well as the upper limit of that medium-term ascending channel that is from May 2025 above 23,480. Seek out the next resistance level at 23,710. Only a breakdown below 23,020 with an hourly close below it that would negate today's intraday bullish bias to see a minor corrective setback, a deeper one, to retest the rising 20-day moving average at 22,840. So I'll be looking out for any signs of a bullish reversal candlestick upon hitting 22,840 to flip back my stance to a bullish stance. Only a breakdown below 22,840 will deepen the minor corrective pullback towards 22,650 next. Right, so that's for the Nasdaq 100. Next up will be the commodities asset classes. Let us start with the gold XAU/USD. So for gold XAU/USD has started to shape that pullback. So pullback level has hit the support level at 2380, and right now trying to form a bullish hammer candlestick as we're speaking right now. And upon forming the bullish hammer candlestick, the RSI is almost hitting the oversold level, and with a bullish divergence that is impending bullish divergence that is taking shape right now over here. So with that, minor pullback level has been met, and also the Fibo retracement of this last wave 3 move upward that also constitute with the 38% Fibo retracement and the 50% Fibo retracement. So with that, bullish divergence that's being formed, pullback support level has already been met, so that could be the tail end of this minor pullback scenario. And like I mentioned yesterday, we are in a medium-term bullish trend for gold, so it doesn't pay to be continues to be bearish again. So now I will flip my honors back to the bulls, given this positive element that is playing out. So using a short-term pivotal support level at 3,360, which is the minor swing high area of 15th of July and 18th of July, now turns into a pullback support level. So I will flip my honors back to the bulls again, given that the minor pullback has really hit a tipping point where the bulls could continue to resume its impulsive up move sequence. So 3,360 short-term pivotal support for gold XAU/USD. Flip my bias back to a bullish stance. First resistance level to watch 3,420. Above it, seek out 3,450 next over here. Let me put it in writing. 3,450 next in the first step. Okay, which is also the ongoing minor swing high of 16th of June that hasn't been surpassed. Above it, SIG will potentially seek out 3,480 followed by 3,500, which is the current all-time high that's printed on 22nd of April. Only a bearish breakdown below 3,360 that would negate today's bullish bias stance to see a retest at the 20-day and the 50-day moving average again, and so confluence with the medium-term ascending trend line from the low of 31st of December 2024 low, which is all confluencing at this similar level at 3,330. So upon price action hitting 3,330, I will also maintain looking out for bullish reversal candlesticks to flip my bearishness back to the bulls again over here, given that this is a bunch of key support level as well. So i.e. Given that yesterday's minor corrective pullback sequence has more or less played out its part, so I'll be flipping to a bullish bias stance again for gold XAU/USD for today, using 3,360 as my short-term pivotal support level. Lastly will be the West Texas crude oil. So the West Texas crude oil continues to plummet, print out a series of lower low over here. So during this series of lower low, as we could see, the price action, okay, lower low. Okay, so the price action on the hourly RSI also shaped the similar price movement with the raw price action on the WTI crude over here. So given that there's no bullish divergence, market, we are still maintaining our bearish bias using the similar short-term pivotal resistance level that I have yesterday, which is very confluencing with the 20-day moving average as well as 6740. So 6740 short-term pivotal resistance level, maintaining my intraday bearish bias in anticipation of this range breakout scenario with the range support at 6510. So it has been trading in this sideways range configuration since the low of 25th of June. A breakdown below 6520, not 6510, 6520 trigger a bearish breakdown of this range, exposing the next near-term support at 6275, which is the minor swing low area of 2nd of June and 4th of June. Only a bullish breakout above 6740 that will see the West Texas crude oil floating up towards the upper limit of this sideways range configuration at 6850/6915, which is also confluence with the 20-day 200-day moving average, pardon me. So net overall, still maintaining our intraday bearish outlook on the West Texas oil using 6740 as my short-term pivotal resistance. So that also sum up the intraday outlook on all the broad-based cross asset classes. So as usual, before we go, let's have a quick look at the economic calendar. What are the key data to look out for? So I did mention that today will be flash PMI data releases for the global one for the globally. So during the European session, we'll have Germany manufacturing and services PMI release at 3:30 p.m. Singapore time, and at 4 p.m. will be the aggregated Eurozone one, both manufacturing and services. So between 3:30 and 4 p.m. that could the release of this flash PMI data for July could influence the euro dollar, the euro crosses, and the Germany DAX. All right, and at 4:30 a.m. that will be the release of the UK manufacturing flash PMI and the services flash PMI that could influence the sterling dollar, the sterling crosses, and the UK 100 CFD index. And also today we have ECB announcement at 8:15 p.m. Singapore time. So market is participating, is expecting no change at 2%. And what's interesting over here is that market will be hearing at 8:45 p.m. ECB press conference from ECB President Lagarde on how firm is ECB coming towards the tail end of its interest rate cut cycle. So recall that the previous meeting, ECB President Lagarde hinted during the prior press conference, not today one, stating that ECB is coming very, very close to its interest rate cut cycle. So if during this time around press conference at 8:45 p.m., ECB President Lagarde continues to hint much more such scenario again, giving a much more higher chance that ECB is coming to the tail end of an interest rate cut cycle that could actually further strengthen the euro dollar. That means, i.e., potentially seeing further dollar weakness. And also at 9:45 p.m., we'll have the flash PMI manufacturing and services for the US out at 9:45 p.m. All right, so that will be a rather US quiet session. All right, and on Friday, early Singapore time, before the start of the daily dose, 7:30 a.m., we have the leading inflation data out from Japan, which is the Tokyo zone. So Tokyo zone core CPI data will be out. Market is expecting a rather firm number at 3.1%. So that could also influence the dollar yen, the yen crosses, and the Japan 225. So that's 7:30 a.m. Singapore time tomorrow, before the start of our daily dose at 11 a.m. So that sum up today's daily dose of market insights. I'm Kelvin here, signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.